Hello, I am Rajat Gupta and I'm the founder of this site breakingtrade.com. So in this session we are going to learn what is market profile. Okay, so to give you the introduction of market profile, so this is our first thing is introduction, right? So in order to explain what is market profile, it is a tool which tells you the story of the market. Okay, so before going deep into the market profile, just understand that it is not a say buying signal or selling signal or any indicator that you have been using previously or which are already available in the market, which say that okay, if line is crossing at one particular point, then you should go for the buying, otherwise you should go for the selling, all those kind of things. So give you a simple example. Suppose two of your friends are there, okay, and this is one and this is two. Now you both go for the movie. So say this is a movie. Now you reach to the movie at exact time, which is 12 p.m. That movie is going to start, and your friend comes at say 1 p.m. When he comes at the 1 p.m., he sees there is a man with a hat. Okay, he's a good person, nicely dressed. Okay, so here he sees, he says, "Oh, he's talking nice. He should be a good person, wearing hat, wearing coat, talking properly." But you have been to this movie from 12 p.m. starting. That is from the start of the movie. You know that he is the serial killer. How do you know he's the serial killer? Because you have been seeing the market. I mean, you have been seeing this movie from the start. So you know what action he has taken in the past, what he has been doing, and how the story unfolds. So similarly, market profile is a tool which tells you the story of market. Okay, so it's a conduct for listening to the market. So okay, so let's refresh this page. So for the market profile, first thing is that this is x-axis, okay, and this is y-axis. So I'm going to tell you how these charts are going to be read. So for the on the x-axis, you can see there is a date, that is this is 2110, this is 2010, 1910, 1610, 1510. Similarly, means each day is marked on the x-axis. On the y-axis, you have the price here, okay, and in the middle the chart is drawn. So how this chart is drawn, what these letters denotes, what actually these are, means why these are A B C D O L M. Okay, so I'm going to explain you all the things here. So first of all, the letter O denotes the opening of the market. That means wherever you see there is a O, that means market has opened on that day at that particular price. So on 21st and 20, we say Nifty has opened around 11949. Similarly, here market open has around 1864. Okay, now for the market profile, each session is divided into a letter. So let's say our market starts at 9:15 a.m. So if I say market starts at 9:15 a.m. So in the standard market profile charts, which are of intraday, one day, shown here, each session is divided into a 30-minute. That is 9:15 to 9:45 a.m. is denoted by letter A. Then 9:45 to 10:15 a.m. letter denoted by B. Similarly 10:15 to 10:45 a.m. letter denoted by C, and so on, D, E, F. In the end, we have 3:15 to 3:30 p.m. This letter is denoted by M. So if you add just half an hour through each timings, you will get here that 2:45 p.m. to 3:15 p.m. L letter is denoted. Okay, that means we are going to record the activity of market each half an hour. So market opens here at 9:15, then whatever is the activity of A letter, this denotes that letter, whatever the market has done, it has done from 9:15 to 9:45 am. Okay, so similarly B letter shows that whatever the market has done from 9:15 to 9:45 am, and similarly. So this is what these letter denotes. Now before moving further, I'll give you one more example. What is market profile and how it originated, means what is the logical concept behind it. Understand like this. Okay, suppose I say there is a class of 100 students are there. Okay, say class of 100 students are there. A test is conducted, and in that test we have say 3 gradings, or say 4 gradings are there: A, B, C, D. D is fail. Okay, A is top and B, C is average. So out of 100 students you will see, okay, say 7 have top, means they have a score say above 95 plus. There are few students who have failed also, say 10 students have failed. They have scored less than 30 marks. The majority of students will be scoring say 30 to 80 here. Okay, there would be few students from 80 to 90, then 30 to 40, and so on. So most of these students are from 30 to 80. So similarly, when the market activity unfolds, it is not like that market trades at one particular price always. As the market unfolds, there is a particular you can say area or selected range where the market activity is the highest, and there are extremes where the market activity is lowest. So these extremes would be the top and failure. So if we see the charts, you can see, suppose this is the chart here, and you can say these are the extreme. Here the market activity is very less, market has spent very less amount of time at this particular price, and also market has spent very less amount of volume here. So another extreme is this. Similarly, at this particular price also market has not spent most of the time. So there are few areas in the market where the activity is very less. Or if I give you one more example, that a scientific example, a practical example that has been conducted. So suppose I have pebble balls like 1, 2, 3. These are the balls. Okay, there are too many balls here, and I say I have a resistance here. Some wooden blocks are there. These are the say wooden blocks. Okay, randomly placed here, and these are the slots. 1, 3, 4, 5, 6, 7. These are the slots. Now if I throw these balls freely, so there are more chances that ball would be falling in this particular slots more. There would be few balls, 1, 2 balls here, 1, 2 balls here, but most of the balls would be in this slots, right? And these are the extreme. So when you throw the balls randomly with some of the resistance blockage here, so you will see that most of the balls would be into a one particular area, and there would be few extreme where the number of balls would be the least. So this is called the this representation takes the form of a statistical bell curve. That means when you determine the statistical bell curve, that the probability, the distribution of these poles is similar to the market profile activity. Okay, So coming back to these charts, what we know right now, that this is the opening of the market. These letter denotes the half an hour session from 9:15 to 9:45 and so on. And this is the price. Okay. Now the second thing which comes here is the TPO, and this is the most important thing. This is called TPO. What is TPO? So TPO is the we have this TPO. It is the time price opportunity. So T for time, P for price, and this is opportunity. Okay. Sorry. So now if I have to explain what is TPO in a layman term, like in a more simple way. So TPO is the significant amount of movement of a particular script that should be recorded. Understand like this. What is TPO? TPO is the significant amount that a stock should move in order to capture its activity. So remember, market profile is not about some indicator or something. It gives you the data into a meaningful information. It converts the data into a meaningful information. So every movement is not significant for market profile. So if I say TPO is 5 units for market, this Nifty, that means whenever the Nifty moves at least 5 units from its origin, from its previous price, then only we are then we are going to form the new TPO for it. Okay. Now understand why, how this TPO is calculated. That should be the question that might be coming into your mind. So TPO is determined by various factors, like what is the volatility of the script is, what is the range of the script is, and how the significant movement should be this. So for Nifty, say we are taking TPO as 5 units. So this TPO, you can change it also, like if you say TPO is 10 units, then you can also set it to 10 units or 100 units also. But this value which I give here, it is determined on various algorithms, which is the best thing, which is the best value, so that you can get the meaningful charts. Even if I say TPO is equals to 1 unit, then also chart is going to be formed, but then the chart is going to be very long. You won't be able to find any good information from it. Means for every single movement, every 1 unit movement, I am going to form something, so that is not going to convert into meaningful information. Now suppose I am saying Reliance. So in Reliance you can see that TPO is 3 units. Means since the range of the Reliance is comparatively less to Nifty, and it has the value of 2000, where Nifty is in 11,900, 12,000, and average range is around, you can say, if I say here what is the average range, so average range is 59.86, and for the Nifty it is around 100 to something. Okay, 100 to 120. So you can see that TPO is 3 units for Reliance. That means a 3 significant movement of 3 units of Reliance is going to be recorded. So I say if Reliance is at here 2117, if Reliance move to 2114, then only new TPO K is going to form. If Reliance is say 2117 and it goes to 2116, then no TPO is going to form, because we have taken the size of the TPO as 3 units. I hope you are understanding this. Similarly, if say Reliance at high is 2195, if Reliance move from 2195 to 2197, we are not going to form another TPO here. We are going to form another TPO only if Reliance move from 2195 to at least 3 units, that is 2198. Okay. So this TPO means time price opportunity. Now why the time is coming? Because each TPO is formed in different time. These are all our TPOs. So A TPO is formed from 9:15 to 9:45. B is from 9:45 to 10:15, and so on. And this is against the price. So not going into a very complex definition of time TPO. I'm explaining you in the simplest form that you should understand what TPO means. So even if you can set the TPO here as say 10 units, but then you are not going to see any major movement in the charts. That means if Reliance moves 10 units, then only you are going to form a new TPO. Okay. So I hope TPO thing is clear. Now, what are the different other things in the market profile charts? We have seen TPO. Another thing is IB. So what is IB? IB is initial balance. Okay. So IB IB is initial balance. What is initial balance? Initial balance is the range of market in first hour, that is in 1 hour. Whatever the range of market is 1 hour, we call it as IB. So I just rub it. Let form a new page. So we have IB. So understand, like, just wait. So I say IB is first half an hour range. So from 9:15 to 9:45 we have letter A. 9:45 to 10:15 am we have letter B. So this range formed by these two letters is called IB, initial balance. What is the importance of IB? We are going to understand it later. So in charts, if I see here, so suppose if I use the Nifty charts here, so you can see this is the high of A and this is the high of B. This is the low of A and this is the low of B. So we are going to take the range of A and B. So range of A and B is going to be high of either A, high of A and B. In high of A and B, both A and B has same high. So we are going to take this high 12014 and low of A or B, which is the lowest. So if I want to write in an English term, I would say highest of A or B minus lowest of A and B. So make it not or but make it as and. So whatever the high of A, if A high is say 100 and B high is say 90, so we are going to take high as 100. Similarly, lowest of A and B, if low of A is say 40 and B as 30, so we are going to low as 30 and then we are going to subtract it. So 100 minus 30 is going to be 70. Applying the same logic here. High of A and B is 1204, same, and in case of low, A has formed the lowest, so 1954. So a range of would be 12014 minus 11954. This is called the IB, initial balance. Similarly, if we want to see the initial balance here, the high of A is around 1924 and high of B is 1909. So we are going to take high of A. Similarly, low of B is 11879 and low of A is 11839. So we are going to take the low of A also. We are going to take the high of A and low of A, subtracting it. This will give you the initial balance. Okay. Now what is initial balance? How we are going to use it? We are going to learn later. Okay, so next thing comes in market profile is range extension. Now before understanding range extension, understand like that in market there are two types of player daily. One is local trader, okay, and another is other time framers, okay. If I say two traders, one is local traders. Who are the local traders? These are the retail traders like you and me who who do not have the power to move the market. We can only participate. They only participate in the market. And then there are other type of traders we call other time framers. Okay, so these are the, or you can say other traders, or you can say large traders. These are the institutions, okay, big houses. They can move the market. Okay, they have the enough power and money to move the market into one particular direction. So when we say the range extension is the movement of a stock out of the initial balance. So whenever the market moves out of the initial balance, we called it range extension. So here is the initial balance A and B, and if we see where is the range extension done. So range extension done is, now understand this, O is also a part of A. Okay, so we have denoted this letter O to mark the opening of letters. So this is the whole initial balance, that is 119549, 119492, 12014. So this is the range extension. This is the IB range. Now whenever the market break this IB range in either direction, we call the range extension. So we saw that market could not go higher into the range extension till the F period, G period also, but into the I period it did break the initial balance. So this type of activity is normally called the range extension. So what is range extension? Pardon me for my writing. Extension, breaking of market out of IB, either side. Okay, so here the market broke into the lower side of the initial balance. Similarly here if I see the range extension has been done into the D period. Okay, here if I see the range extension has been done into the C period, but it was only just a single TPO. Similarly here the range extension has been done into the lower period, that is the E period. Here the range extension has been done into the K period. Okay, so what are the significance of these range extension? Again we are going to understand later. First you should know what are the terminologies of the market profile. Okay, now another thing comes is value area. So the pink shaded area you are seeing into the market is called the value area. Now what is this value area? It is the 70% or more of the market activity to one particular price. We called it as value area. So here we can see the value area is 11929 to 11889. Okay, so this is the pink shaded area, and it says that 70% of the market activity in terms of TPUs and also time has been into this particular area, that this is the area which has been more buyers, most of the buyer and sellers were finding comfortable and they have traded. Okay, and this upper side is called value area high and below side is called value area low. So if I say This is the range extension here. This is the value area here. So this is the value area high and this is the value area low. Okay, and this is the 70% or more of the market activity. Okay, so this is a value area high and value area low. Another thing comes inside it is POC. POC, you can see the horizontal line coming from each chart. Here you can see this is the POC, this is the POC horizontal line, and here this is the POC. So what is POC? POC is the point of control, and it is the that line at which particular price the market has traded the most. So in order to calculate POC, you can say the horizontal line which has the most number of TPOs, that is the row. These are the rows and these are the column. The row which has the maximum column. So this is the row which has the maximum column here, 1 2 3 4 5 6 7 8 9 10. So in terms of understanding of the market, say for this particular, I think this just pops up. So for this particular thing, at 11864 market has traded the most for the whole day. That means 11864 has been crossed, or the market has visited this price in most of the sessions. Similarly, here you can see we have two rows which have the most number of columns, that is this H and this H. Then we take that particular line as POC, which divides the whole market into the middle. So if we say this, if we take this as POC, or if we can take this as POC, we have two choices because these are the two lines where market has visited the most compared to all the prices. So we will take this below line because this is more middle into the whole chart. Okay. Similarly, you can say this is also the POC line and this is also the POC line, but the POC we are going to take is this one because this is dividing the market, dividing this particular day more into the middle. So this is like a, so this line we called a POC, that is point of control. Now what is point of control again? Point of control is like a magnet of the market for that day, that whenever the market tries to go above POC, market pulls it down. Whenever the market goes below POC, it pulls it up towards the POC. So this is the POC is called point of control. Right. Now another thing comes is the closing range. So whenever you see M and there is a hash in front of the TPO, that means that was the last TPO. So this, since the market has closed here, so here you will see, okay, market has closed around 11934. So this is the last TPO formed. Okay, the last particular TPO that could be formed here is the M hash. When you are seeing in the live market, you can see, okay, I hash or H hash, that means this is the last TPO that market has formed or the latest TPO the market has formed. So this is the closing of the market, and M letter denotes the closing range, that is, as I explained you earlier, from 3:15 to 3:30 p.m. M letter is formed, which is known denoted as closing of the market. Okay, so this defines the terminology of the market profile charts. We have the initial balance, we have the opening of the market, we have the range extensions, we have the value area, we have the value area high, we have the value area low, we have the point of control, we have the closing range. So this constitutes the terminologies of the market, which are the very basic fundamentals, and of course we should never forget the TPO, which is the core of everything. So all these letters are TPO, and how this TPO size is determined, I have told you before, depending upon the volatility of the market and the script size, the stock size, the TPO is defined. This TPO is automatically given on this website because this is calculated based on various algorithms, and whatever the best price or whatever the best value could be for the TPO is displayed here, and charts are formed according to it. Okay. So this is the first session. Now we are going to advance into the another session. I hope things are clear. Thank you.